The Dow hitting another record high this Wednesday afternoon. The S&P 500 gaining about 0.5% and not that far from its all-time highs either. Let's talk markets and also look at some buying opportunities with Liz Mlile. She is president of Summit Place Financial Advisors. Welcome.
Thank you.
Financials and tech stocks are leading what seems to be a broad-based rally today. What's spurring the buying?
Well, there's certainly some relief with the pressures over in Italy that has taken the cloud off of the global trade. But I think what's really driving things today is we're seeing financial stocks, maybe almost for the first time this year, really responding to those rising interest rates. The 30-year bond hitting a new high, hitting around 3.14 at 1%, 3.14% at one point today. And today the financials are responding. We would have expected to see that all year with rising rates. And so I think a lot of investors are hoping this is a bit of a turn and we will see these stocks continue to respond to the slowly rising rates in the U.S.
You mentioned that in talking about the financials, it's been a head scratcher too as to why they haven't done better given the rising rates. So you think this is a turning point? Is it time to buy into the financials?
I think it's a good time to be buying into financials. We like the sector. We have been expanding our ownership in it, but we've liked it really since the beginning of the year on the theme of rising rates. Historically, rising interest rates are good for the banking sector. So as you said, it's been a head scratcher for a lot of investors as to why the stocks haven't participated. The earnings have come through just fine.
Any particular bank stocks that you like?
We've been adding Bank America lately. I think there's good upside to that stock. One of the large caps, of course, sometimes we call them the money centers, but we still see value in it. We think it's one of the best choices among the money center banks right now, and we've been adding to positions.
What makes it more attractive than, say, JP Morgan or Citi?
Well, Bank America does not quite have the same exposure that a Citi or JP Morgan has in some places to that investment banking arm. Now, we do have Merrill Lynch involved there, but you've got a different balance sheet at Bank America that's attractive, and you have much more of a mortgage portfolio, which actually has been doing pretty well and should be a good driver for the future.
All right, so far so good for the markets in this early stage in October. But again, this is a month where, of course, a lot of the stock market crashes tend to happen. We've got valuations at a high level. The breadth is very narrow in terms of leadership. Tech stocks there, and you've got rising rates and a rash of M&A deals. Sound ominous to you, or are you positive?
I'm rather positive. I actually think what it sounds like is things falling into place. What's been ominous to me in some ways has been this market so far this year. We know the broad averages have quietly returned some nice returns, about 9% through September, but it was such narrow leadership. When we really pull back the covers, we really see tech being the driver in almost every sector that did perform, and oil. We know we have rising prices in oil, so that makes a lot of sense. But we have a lot of sectors with good, strong companies that haven't participated. So when I look at the indices making new highs, what I feel like is, well, it's been 6+ months since they did, and all those companies are stronger companies than they were. They've had 2 quarters of good, strong earnings. So we've really grown into our valuations is how I try to look at it. So I think we're actually poised for the market to move higher into year end.
And poised to move higher, led by whom?
I think we're going to be led by a broadening market. We've already seen some profit taking in tech, certainly not surprising at the end of the quarter. We always see the start of quarters where we see some profit taking. I think there's a lot of great companies in the technology sector. I'm not at all suggesting that investors pull out, but even with the S&P readjusting its balancing, you have over 20% of the S&P 500 in technology, and you have such great sectors that haven't performed this year. Staples, those products we need every day, toothpaste and shampoo, all those companies are stronger companies, and they haven't participated. A bunch of the industrials, we have a very strong economy. It continues. They're having good years, and the stocks haven't participated. So I'm looking for a broadening market into year end.
Any particular stocks that you think are poised to break out or have good value?
Well, we talked about Bank America in the financial sector. We haven't talked about the healthcare sector. We saw that starting to participate this summer. No reason that it's been left behind. Again, another area with strong companies. One of my favorites there right now is Merck. Certainly not a new name, but a name that really has been boring to many investors for year after year after year. Well, now we've seen for several quarters now, they have a strong product in their pipeline. They've really rationalized the business a lot. The stock has started performing, but I think there's plenty of upside from here, and we are buying positions in it.
All right. Thanks a lot, Liz, for your thoughts. Appreciate it.
Thank you.
Our thanks to Liz Mlile of Summit Place Financial Advisors. I'm Fred Katayama. This is Reuters.